The Nifty is opening at about 6.7 points higher, 10,910, 915 thereabouts.
The markets, it's quite stable. The mid-cap index, however, is now showing further profit bookings.
10,987 is the high, and we're at 10,973.
The market, we're just about at that 10,960 odd mark on the Nifty. The Sensex up about 230 odd points.
10,970 is what we have. The mid-caps, of course, today have underperformed. On the way down, you had Yes Bank, which was down 4%. Hero Motor was down 4%. In fact, the entire auto sector, Maruti was down.
Market cools off after a solid start, but ends 0.5% in the green. Sensex goes past 36,500. Nifty finds resistance at 11,000. Reliance leads with gains for the second straight session.
Mid-caps underperform and lose nearly 1%. Jubilant Food, Philips Carbon, Vodafone, Idea, other key laggards. PSU banks were also on a weak wicket. That index fell more than 1%, dragged by Central Bank and Union Bank.
Sun Pharma gains on CNBC TV 18 report that the company may be planning a restructuring of Aditya Medi Sales. The domestic distribution business may be moved from Aditya Medi Sales to Sun Pharma. The R&D arm Spark also rallies 17%.
Kotak Mahindra Bank gains 2% after reporting strong loan growth in the third quarter. Asset quality continues to improve for 7 quarters in a row. On the other hand, South Indian Bank and Union Bank slip after reporting weak earnings.
Market regulator SEBI advises Larsen & Toubro not to proceed with its first buyback offer due to balance sheet concerns. Says the consolidated debt-equity ratio will not be in the permissible limit. The management, however, tells CNBC TV 18 they will present their case before SEBI again. Those were the top 5 headlines from Dalal Street on a day when the market once again, or rather the Nifty once again, met resistance at that 10,980 mark. What, for the 10th or the 12th time in the last 12 weeks. Hello and welcome to Markets Today Talkback, the show where we tell you everything that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Another high, 40 points by close at 3:30. But I mean, as we pointed out, I mean, it was a very narrow kind of a rally. And the broader market actually was under immense pressure. Advanced decline, a clear indication of that. So we'll talk about all of that over the next 30 minutes. And of course, we'll take your questions as well on stocks, on sector, on capital allocation. Joining us to answer your questions now are Deepan Mehta, member BSE NSE, and our technical expert Ashwini Gujral. Deepan, Ashwini, thanks very much for being with us here on the show. But let's spend 2 minutes taking a quick look at what the markets really did right from the word go at 9 in the morning. Lata.
Well, first up, we started with green cues from Asia. The Chinese GDP numbers did not rattle those markets. According to the few people we spoke with, it was entirely on expected lines. The 6.6% GDP growth of 2018, the lowest in 28 years, we were told, but the markets weren't rattled. What helped the Nifty quite clearly was Reliance. Absolutely shouldered for the second straight day. And it was a league of its own. But the other part that was abetted by Asia were the metal stocks and the weak rupee. Actually, several Asian currencies were weak. Rupee particularly weak because crude was rising, and that was a little bit of a rupee negative. That also helped IT stocks. But the positive stops there. Thereafter, I have only negatives to tell you, and primarily that comes in the form of higher crude, which means higher yields. Higher yields means cost of capital is higher, and therefore first NBFCs, then PSU banks, and thirdly, all mid-caps. I mean, once cost of capital rises, that's not the day you choose to buy mid-cap stocks. The overhang on the market is very clear. It's the fiscal overhang. And then on Friday, you also had the Reserve Bank governor clearly saying that he's, the inflation number is extremely volatile and core inflation is too sticky. It's not falling like the rest of the pack. So that also perhaps was an overhang. Results were the other big thing, and that clearly dominated both the positives and the negatives. Good results from Kotak Mahindra Bank. It's the second biggest performer in the index after Reliance. Bad results from Union Bank, South Indian Bank, and that just didn't take Union Bank down. It took all the PSU banks down. And of course, they were abetted by higher yields as well. The 10-year yield went to 7.65 at one point in time. More stock-wise details.
As always, Lata, sectorally, energy did well, and I think the one reason was Reliance Industries. which continues to gain. Pharma and IT were the other areas which saw some buying. So, I mean, you could look at it as a defensive kind of day with people flocking to these areas. On weakness, there was real estate, PSU banks, as you pointed out, and autos, which also saw a fair bit of weakness. Large caps, RIL, 10% now 2 days. Today, of course, another 4-5%. Kotak Bank, slow start after numbers, but built on steadily. Bajaj Finance was the other one. There was Bajaj Finserv also, which was up about 2% plus. And a few IT stocks, I mean, Infosys, for example. On the losing side, as I said, autos, Hero and Bajaj both lost quite a bit. Hero was down almost 4%. Yes Bank, I mean, after getting to about 211 the last 2 or 3 days, it's lost. It's back at about 190 rupees. Wipro and Maruti were the others which lost as well. Wipro, of course, reacting to numbers. Broader pain coming through, as you said, Union Bank, there was Idea, there was South Indian Bank, HEG, Philips Carbon, something like a Future Retail, and I'm only highlighting ones with lots of volumes. And gains, Spark was up about 12% plus, UBL, okay, Spark was up 18% by close. United Breweries was up 5, Linde India 8.5, ITI, and something like a Hutco stood out with decent gains as well. But I mean, the rally really led by very few names as far as the Nifty is concerned. Mid caps, small caps, indices themselves ending in the red.
Oh, absolutely. I mean, you're right. It's getting narrower and narrower.
Yeah.
And today, I think there was about 600 stocks in the green, about 1,500 stocks in the red. So clearly, it's not a broad market rally, and that's where the pain is. That puts off a large number of HNIs and smaller investors and traders. But let's see. It's also true that there are several performing stocks. So let's ask our guests what they make of the markets. Ashwini, to you first. Your assessment of the day. Does it look like the bulls have won? Do you take a bullish bet tomorrow?
See, basically what's happening in the market is that, we've seen phases where 8 to 10 index stocks, they hold up the index, and meanwhile, mid caps and everything else collapses around the market. I think we are in that sort of a market where this 10,800, 11,000 and maybe say 10,600 to about 10,800, this sort of couple of 100-point type ranges could continue. This is, basically a trader's graveyard, and with very little follow through. Every day you'll have 3 index stocks keeping the market higher, and people would think that, since mid caps are weaker, hence the market would fall. Others would think since it's holding up, it should go up, but it will do nothing. It will be like 50-70 points lower, 50-70 points higher, and basically something like Reliance, Kotak, etc. Holding up the market. There is very little interest, and people are buying into large, well-run stocks, etc., and building up their portfolios. There's very little interest in the overall market.
Fair enough. We've got a question actually coming, the first question coming in, and this is essentially on the stock of the day. Shantanu M from Rajasthan has written in with a question on Reliance Industries. He's been holding 1,000 shares of RIL. His cost is 980 rupees a piece. He's a long-term investor, wants to know whether he should hold or sell. I mean, let's take it to both our guests. Deepan, first up with you, RIL, what would you recommend?
I think it's a no-brainer. Investor has to hold on to the stock, which this kind of flurry taking place in the trading counter, and a lot of analysts enthused by the results which have come, and also that the expectation building up that eventually RIL will get split into 3 companies, and shareholders will get shares of petrochem, refining, retail and telecom, and that would be a huge value unlocking exercise if they do undertake it. So I think RIL will remain in the limelight for a few more months or so, and investor certainly is sitting on profit. He should let the profits ride at this point of time and reassess the position after a quarter or so.
Okay, point taken. There's actually, let's get this question to Ashwini as well. Ashwini, more generally, not just for this gentleman, this 10% rally in RIL, can one go for more here?
Definitely, I think Reliance can hit fresh highs, and the market can still hang around doing nothing. So possibly 1320, which is previous highs, that can get tested, and maybe even fresh highs can come in.
Okay, fresh highs possible on RIL is what Ashwini is saying. Deepan's view also there very clear. We move on to the second story then. Mid-caps underperformed to shed nearly 1% in trade. Jubilant Food, Philips Carbon, Vodafone Idea were some of the casualties today. PSU banks were also on a weak wicket. The index fell more than 1%, dragged by names like Central Bank, Union Bank, etc. Both those names, Union and Central Bank, were down between 7 and 8%. We've got a question. Okay, I think... I mean, actually, let me just put this to Deepan. Deepan, any thoughts on what you saw on the PSU Bank space today?
I think see your disappointment over there, but the more important numbers are what coming out from SBI and Bank of India, Bank of Baroda, Canara Bank, the larger banks. And if we see some sort of a turnaround over there as far as their NPA problems are concerned, I think then that would revive the interest in these stocks. It's widely expected that NPAs have peaked out, and therefore further reporting would be curtailed. And more importantly, credit costs will come down. You could expect some reversal of interest which they have written off earlier. And all of that, and keeping in mind the low base effect, you could see extraordinary results coming in from a few PSU banks. So although one cannot paint the entire sector with a single brush, but yes, I think there is scope for selective appreciation, or at least trading bounces in a few PSU counters.
Take your point, Deepan. It's just that one doesn't know which PSU bank has actually turned the corner. Today, Union Bank clearly gave you the impression that you can't be gung-ho or expect too much good news about everyone. It will be a select few, and only post the results we will know which are those select few. But to be fair, that's the case of the private sector banks as well. South Indian Bank was nothing to write home about, but DCB was good. So, you know, you could have it both ways. Well, the third headline for the day, Sun Pharma saw a relief rally in today's trade. This after CNBC TV 18 broke the story that the company is planning to restructure its distribution arm, Aditya Medi Sales. The company's R&D arm, Spark, also saw a scintillating rally of more than 17%. Ekta is here. She's the one who broke the story, this news about possible restructuring of Sun's arm. Ekta, tell us all that you know.
This is probably going to be something that could assuage investor concerns, because the investor concerns are on two main issues when it comes to Sun Pharma. First is Aditya Medi Sales, which is the domestic distribution arm of Sun Pharma, which is basically 100% owned by promoters, and as of FY18 it was declared as a related party in the FY18 annual report. So obviously there were concerns with regards to Aditya Medi Sales which had cropped up, and secondly there were FY18, the annual report also indicated that loans and advances to third parties rose to around 2,300 odd crores, and hence there was concern with regards to these loans and advances to third parties as well. Remember that in December, Sun Pharma had held a conference call, so they had tried to answer a lot of these questions when it came to Aditya Medi Sales plus these third-party loans. But and at that point, they had mentioned that they are open to review. So now my sources are telling me that in fact Sun Pharma is planning to restructure Aditya Medi Sales soon. Plus, they are probably going to provide some amount of clarity when it comes to these third-party loans. In terms of Aditya Medi Sales, the domestic distribution business could probably be transferred from Aditya Medi Sales to Sun Pharma. Now, we don't know what kind of details would entail in terms of the transfer of the business. That would be important to watch. Plus, also clarity on questions such as whether there are more related parties that Sun Pharma has, or any sort of declaration of that in future annual reports. So there are a lot of concerns still, but this would probably be one of the big steps for them to address the kind of investor concerns that are coming up. We did reach out to the Sun Pharma management, and the management did reply to us, telling us that, as stated earlier, we're in the process of evaluating various options for undertaking the distribution of the domestic formulation business within Sun Pharma.
Okay, we got a question. Ekta, thanks very much for that. Rajendra Prasad from Karnataka has a question on Sun Pharma. He's been holding 50 shares of Sun at a price of 642 a piece. Wants to know if he should hold or sell. Ashwini, broadly, what's your sense?
You know, controversy is a killer for stocks. So maybe they are ready for a pullback. But overall, I would think any pullback, even on Spark, should not cross beyond, say, 250, 270. Similarly, Sun Pharma, again, you have a 3% rally after a 20% drop. Staying away from such stocks is good, because you never know, what is the truth. And sometimes, truth can hurt fairly badly.
Yes, we are still awaiting all dimensions of the truth. I guess the company gives the impression that most of it is in the public domain, but maybe, as Ekta says, there could be yet another analyst comment, analyst meet or conference call or something which may throw more light. But, speaking about controversy is bad for the stock. I like that statement of yours, Ashwini, and let me toss that to Deepan for another stock that was in the news. DCB. Early morning did see a bit of a sell-off, DCB Bank, because of the SFIO saying that they were probably, their tie-up with India Infoline Commodities was not kosher. And the SFIO went to the extent of saying that the banking license should be cancelled. I want to put it on record that RBI has never done that. And DCB itself declared to the exchange that the amount of money they made on that tie-up was all of 11 lakh rupees. So this is really an outsized statement from SFIO. I must warn investors, from the long years I have tracked the banking sector, no banking regulator works on a whim. But nevertheless, what do you make of DCB Bank? Do you have a view, Deepan?
With usual disclosure that we and our clients are invested, I think we are very positive on DCB Bank. Company came out with a very good set of numbers. Operating leverages are now coming into play, and the massive expansion of branches which they have done is now over and done with. I think you could see GCB get into a new growth path. As far as this particular controversy is concerned, I think it will generally die down. And in fact, I don't know whether this is connected with the extra provisioning for a fraud related to a commodity transaction which DCB had done, and they've already provided for it in the December quarter numbers. Whether this is connected or not, but I'm not sure of that. But despite an extraordinary provision for a fraud, DCB's numbers were quite impressive. So remain positive on the stock. Could be a good, consistent outperform over the next few quarters.
Okay. Thank you very much, Deepan. Please stay on with us. And you viewers as well, because our experts are going to continue to answer all your questions. We have to take a quick break and be back.
Welcome back. You're still with us here on Markets Today Talkback. 40 points on the Nifty, led by Reliance, IT and pharmaceutical names. But the broader market was in pain. Advanced decline quite poor. We've been wrapping up the day's happenings, events. Deepan Mehta, Ashwini Gujral have been answering your questions. We covered 3 of the top 5 stories. We move on to the 4th headline. Kotak Mahindra Bank ended the day in the green. This after its third quarter numbers beat street expectations. The company reported a strong loan growth while asset quality continued to improve for 7 quarters in a row. Net interest income also rose to almost 23% year-on-year. Abhishek Kothari is joining us now with some of the key highlights from the Kotak Q3 numbers. Abhishek.
Kotak Mahindra Bank reported a strong set of numbers in terms of the loan growth and improvement in asset quality. So the loan growth for 6 quarters in a row has been on north of 20%, and this time the 23.5% loan growth was primarily driven by the corporate portfolio. So corporate portfolio in the last 3 out of 4 quarters has been growing at north of 25%. So what the strong loan growth meant was the NII growth, or the net interest income growth, was at 10-quarter high, which led to profit growth being the highest in last 6 quarters. The net interest margin came in at 4.33% versus 4.2%. The improving trend in asset quality continued for 7 quarters in a row. Gross NPA came down to 2.07, which compares to about 2.15 in the previous quarter. Street gave a thumbs up to the results, and the stock ended at being plus 2.5%. Back to you.
Okay. And what more can you ask, Abhishek? Great loan growth. Great margins improving from 4.2 to 4.33, asset quality improving. I mean, any parameter you pick, there are no complaints, and that's why you saw the stock rise. It was the second largest contributor to the Nifty after Reliance. So, Ashwini, where does Kotak chart head from here?
See, the way I look at stocks with controversy is, is it material to business, to EPS, or to whatever the operations of the company? I don't think Kotak's issue is quite, impacting the bank. So this is one controversial stock you would like to buy. My sense is that given these results, even Kotak from here could see 1380, 1400.
Okay, so it could head higher, as Ashwini's view. To some more earnings then. Earnings impact, actually. South Indian Bank fell more than 8% after the lender reported a weak set of numbers for the third quarter. Asset quality deteriorated as the bank reported the highest slippages in the past 6 quarters and lowest loan growth in the past 5 quarters. Net profit was also down 27% year-on-year. Union Bank, on the other hand, lost almost 7% on weak third quarter numbers. Asset quality worsened while both net profit and net interest income came in below street expectations. I think we've got a... okay, I think let's just throw it to
Deepan.
Deepan on both these.
Deepan, yeah. Basically, both those banks, South Indian if you're tracking it, and Union if you're tracking it.
No, I think, investors need to stick to quality, and we saw what happened with HDFC Bank and Kotak Bank and IndusInd Bank. I think whatever allocation you want to keep, be it for private sector or public sector, be with the larger banks, the better performing ones, you could get a good quarter from the likes of a Union Bank or South Indian Bank, but over a longer period of time, the larger good quality banks have delivered higher shareholder value and created greater value than the tier 2 banks. So I would say stick with quality and don't get swayed by outperformance, temporary good numbers coming in from tier 2 banks which have a suspect track record.
Absolutely.
Okay, then we move on to the last headline today. Market regulator SEBI has advised L&T not to proceed with the proposed buyback offer on essentially consolidated balance sheet concerns. Remember, the info giant had announced a buyback of 9,000 crore rupees in August of 2018. SEBI turned down the proposal as the consolidated debt equity ratio would have been more than 2 times. We spoke with S.N. Subramanian, Managing Director and CEO of L&T, who said they will present their case again before the regulator. Listen in.
SEBI has an internal rule on which it has stated that based on that, the total debt equity comes greater than 2:1. Now, this is an order from SEBI. We have the letter with us. We have informed the stock exchange. Now we are studying it. We will appeal or take it up with SEBI to see a way out of it, as this is what, in my view, what we have done is what is as per law and what was legitimate and a good move to return value to the shareholders.
Fair point. That's the defense of the company. Uday N from Hyderabad has written to us with a question on L&T. He says he has been holding 148 shares of the company, purchased at 1122 rupees, 1122. Says he's a long-term investor, wants to know if he should hold or sell. He hasn't asked, but should he add, Deepan?
Yeah, certainly you could look at adding L&T, and I know that there are certain fears in the minds of traders, investors, that perhaps there's a minor slowdown as far as order wins are concerned, but I think the company is sitting on very good order book position, and I think the key now is execution, and my sense is that the orders which they booked over the last 2-3 years, they've been quite conservative in terms of margins for those orders, so we could expect margin expansion as well. And the fact that the company is going in for a buyback does show confidence in the balance sheet quality and their performance going forward. So I could expect L&T to be one of the top outperformers in the Sensex and Nifty for the year 2019, and investors would certainly look at averaging and adding further to his holdings. Having said that, it's a company in which we and our clients are interested.
Okay. Deepan, thank you very much for tackling all those questions from our viewers. Ashwini, I would have loved to come to you for L&T, but out of time. Thanks, gentlemen.
Well, it's a wrap here on this edition of Markets Today Talkback. Thank you very much for staying with us. More coming up on the other side.